You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, at least we think so, Options Insider Radio Network. Reminding you, all of you out there on the secret club side of the fence, you can join us a little bit later today for Options Oddities. You know, we profiled a lot of trades over the last couple of months that are weird and crazy, and a lot of them expire today. So we get to have a lot of fun looking at how some of these have performed over the past weeks, sometimes even days, or all the way out to months. So a lot of stuff to break down and parse and analyze. Coming up later today on Options Oddities, you guys can get all of that, the pro Q&As, a whole bunch more. theoptionsinsider.com/pro is the place to go. And however you're listening live after the fact, keep those questions coming. We do love to hear from all of you. And if you like what you hear, keep rating and reviewing on your platform of choice. It does help all the new folks continue to discover the world of volatility. And let's see who's joining us on the old program today. First, we go back down deep into the dark and stormy heart of Texas. We are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, beaming in from the hottest housing market in the U.S., a.k.a. Austin, Texas. Mr. Meatball, welcome back to the program, sir.
Hey, it's good to be here. Quite the day for the market. Quite the day for volatility. I think I'm within a stone's throw of a bullseye here right now.
You are looking pretty good right now. Vol just vanished.
Excited.
Vol just vanished as we kicked off the show. It lost a point in like a few minutes here. So yeah, it's looking pretty good for you right now. Speaking of looking good, how's the meatball? Or excuse me, how's the rock lobster looking? Do we have proof of life? Do we know he exists?
He's feeling a lot better. I think he'll be back on the networks next week. So we're excited about that.
So he lives. That's good. We have proof of life for the rock lobster. So all of you out there who are wondering if he still wandered around this mortal coil, yes, he does. All right. Let's keep on rolling out there to the MIAX hot seat, where we are joined once again by our friend, Mr. Matt Amberson, a.k.a. the Oracle of New Hampshire, a.k.a. the keeper of all that cool earnings volatility data, which is telling us some interesting stuff of late. And he also moonlights over there at ORATS as well, aka Options Research and Technology Services. Mr. Matt, welcome back to Volatility Views, sir.
Good. I'm here with my best friend who's making her voice known here, barking. And it's great. I think I'll learn 3 things from Mark today. So I'm excited for the show.
Ooh, 3 things. You already have it lined up. I'm excited too now as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review portion of the show. We break down what is trading and trending and moving and lighting up our tapes from the world of volatility today. And, I've said it before, I'll say it again. Volatility Views is one of the more challenging shows to prepare for here on the network. We prepare a lot of different content in a lot of different ways. And some shows you could set up and have a reasonable idea of what you're going to talk about days, sometimes even a week or more ahead of time. And then Volatility Views comes along and you can't really prep it more than like an hour, sometimes even a half an hour ahead of time because things move so much. When we have guests on the show sometimes and they ask, hey, what are we going to talk about a week or two ahead of time? I always just laugh. I was like, you have no idea what you're in store for because that vol is moving and shaking yet again. Coming into today's show, we are seeing the markets, they've struggled to find their footing, to put it mildly, this week. And then today, looks like they finally found it. They got their sea legs back again because we're seeing a lot of green on the old screen. NASDAQ up over 1% right now. S&P up over 0.75%, and Dow closing in on 0.75% to the upside. That means all that green means all this kind of vol that we kind of squeezed back into the balloon, all this consternation, all this juice is coming back out almost as quickly as it went in. We had, Spikes was closing in on a 20, so was VIX Cash, not that long before showtime. And they've just been moving and just aggressively in the other direction, as Mr. Meatball was saying. Looking pretty good for his prognostication. Let me just check really quickly where he was. You were at 18. I think you were at 18 double for some reason. That would have been pretty much a bullseye, but it's still pretty darn close. We're at an 18.5 coming into the start of the show. That's already off about a point from where it was not too long ago. So still up about 3.25 points from where it was this time last week. Remember, we were all vacillating around a 15 handle this time last week, and we were talking, everyone was voting in our poll where it was going to close, and not many people had the 15 handle yet. That's what we got last week. This week, a whole range, pretty much every handle we put in that poll last week was touched at some point this week and beyond. It's been crazy. So VIX Cash still up about 3.25 points, but give it a few minutes and that'll be less. And then VVIX coming into showtime is at about a 123, up about 5 points from this time last week. So we have a lot to get to. And Mr. Matt, I know we have the earnings vol. We have some other stuff I know you've been analyzing first. But before we get to all that, it's been just a crazy, turbulent week from a vol perspective. People thought maybe the vol would come rushing in on the sell-off on Monday. And then we had the typical cliche moment of a little bit of vol and then just got wiped away very quickly. Tuesday, same thing in the morning. We saw a sell-off, a little bit of one, vol started popping, and then that was kind of it. The sell-off mitigated, the vol started coming back in, and then all of a sudden we saw the aggressive sell-off kick in later in the day, and the vol popped. We saw the follow-through that we very rarely get. It was all exacerbated by the fact that this was, of course, an expiration week for VIX. A lot of people who had stuff on in the beginning of the week that probably would have looked good now don't have it on anymore. And then, of course, we saw the aggressive sell-off later on with all the Fed spookage. And now, of course, today, this 1% roughly rally out there. So it's been a lot of turmoil this week, Mr. Matt. What's been lighting up your tape, sir?
Yeah, Mark, it certainly has. And, one of the things that we do here at ORATS is we have these indicators, and we back test them all. So there are triggers that will trigger a certain type of trade. What we've been looking at a lot is just historical volatility versus implied volatility, and that measurement of the indexes versus the components. And so, we have been out of some of the more aggressive shall we say, put selling, put spread selling. So, but now it is starting to mellow out right now. So, this is it's quite a market. I mean, Reuters called me and said, "Hey, what do you think about Jackson Hole?" I didn't even hear about Jackson Hole. There you go.
You're like, who has time for Jackson Hole right now, right?
Yeah. And so, but the more I look at it, there is a kink in the VIX curve, a kink in the volatility curve. It's over 1% that they're estimating, and they might say something silly there that will light these markets afire. I think there's, and then also we saw Taiwan. We have this unusual option report, and the Taiwan ETF went off when China was, China's been saber rattling a lot, but when you see the ETF as one of the highest option trading and down over a couple percent, people are starting to get worried there. So I think there's a lot going on in the world right now. The earnings are just wrapping up, and the market's looking for other things. Is it going to be Jackson Hole? Is China going to do something? We've seen Afghanistan go off. It does look a little skittish, and then all of a sudden it'll just roar back. So it is no place for the weak out there in this market right now. That's why I'm glad we're here with you two, the two marks, to lead us through.
This is indeed no place for the weak, no place for the timid out there this week. Just look at the earlier part of this week. I had so many people writing in saying, man, I had the upside this week, and you could have had all the upside you wanted. And it was such a delicate dance of timing. If you took it off on Monday, you really missed it. If you took it off early on Tuesday, you missed it. Of course, through expiration, everybody missed it because the big pop came out. It just shows you sometimes. Everyone says, oh, just buy some big upside calls and put them in your back pocket for a rainy day and you're good to go. It's a little bit more challenging than that. And this past week is really emblematic of how difficult that could be. Looks like people are already putting in their votes early for the crystal ball here on the show. Interesting stuff. All right, Mr. Meatball, a lot to unpack. A lot has gone on. We had an expiration in the middle of all of it. We got Jackson Hole, Afghanistan, all these things, Delta variant, all these things driving vol hither and yon. We could probably do a whole show just in the last couple of days here, but what's been lighting up your tape, sir? You're so excited, sir, that you've muted yourself.
It's what I get for trying not to make noise while Matt is talking, right?
And the irony was that some of the most scintillating things you've ever said in this network, and no one will ever hear.
Yes. I've been thinking a lot about why the VIX curve has been so bid, why we've been talking for weeks about how expensive that VIX curve is. And, the VIX curve has actually been pretty bid, I would say, for a few months, Mark. Stop me if you think I'm telling tales outside of school.
Stop.
But, I'm wondering if we've got kind of a hedged feedback loop on our hands. And let me explain what I mean by that. So I'm a big money manager and I'm worried about this market. So I go in and I buy VIX puts, or I buy puts on the SPX, or some sort of other hedge on my position. Then the market sells off 2 or 3%. I'm not worried because I have my hedge on and my hedge is protecting me. So I don't sell. This causes a lack of secondary selling on these sell-offs that would normally trip algos to push things and allow us to get a 5 or 10% correction. Well, when that sell-off fails to materialize, you get the buy the failed dip crowd stepping in, buying it, and then pushing the market to new all-time highs. That seems to be what has happened on every single VIX spike that we've gotten this year so far. And I'm wondering whether it has to do with this market is so afraid that it wants to protect it. It's overhedged and we pop and we don't sell. It's almost like a self-fulfilling prophecy.
That could very well be. There are a lot of forces at work, a lot of competing. Just look at our poll from like a week ago. People were all over the place. Everyone has a different outlook on where vol should be, what the drivers are, what impact those drivers should have. You could pull out each one of these, Afghanistan, whatever, Jackson Hole, the Fed, Delta, each one of these, you can make an argument for maybe moving us into one of the higher zones of VIX, let alone all of them together. So there's a lot of different factors at play out there and a lot to break down. This is going to be an intriguing show, I think, to say the least. Let's kick things off. You know what else is intriguing out there is in the land of the futures. The MIAX folks have been on here for a while now saying, hey, we're really kind of putting the accelerant on the fire there. We really want to get the futures out there trading. And we had Matt on here who kind of oversees all that last week. And he was saying, things are pretty much lighting it up. And that continues to be the case this week. They had another new daily volume record for Spikes futures this Tuesday, the 17th, 8,202 contracts going up. And that's great to hear for everyone out there who's listening to this show, who's saying, man, I've looked at the Spikes options and maybe I was a little intimidated because the markets were a wee bit wide. Well, this kind of thing, more of these over and over again, are translating into more volume out there and going to translate into tighter markets. So it's going to make it less intimidating for you folks. Because I get it. You look at like a VIX at the money put, you see a fairly tight market. You go look at something similar in Spikes and it might be like a buck wide. And you might be saying, what am I doing? What is going on here? So more futures volume definitely going to help incentivize those market makers to step up, tighten those initial markets. You don't have to kind of go in and kind of go fishing like you had to earlier, where in Spike's option, you had to kind of put something out there, maybe mid market, and hope someone would kind of try to step up and trade with you. And these days, with more and more volume pretty much every day out there on the Spike's future. So they're definitely kicking it off, which is good to see. And again, that's going to only translate into more options volume and tighter markets down the road, which is what we're all here for at the end of the day. And looking at the VIX futures, interesting stuff as well. Obviously, the August future off the board now. This week would have been a good argument for maybe a Friday expiration for VIX would have been nice this week. But hey, that's a conversation for another day. A SEP future up nearly 2 points coming into the start of the show. The OC future was just new on the board this week, so we don't have a comparison. It was right around almost 22.5 when we kicked off the show. So, Mr. Meatball, you mentioned kind of some backward juice creeping in there early. Any thoughts on what's been lighting up your tape and the evolution we're seeing out there, particularly in the front portion of the VIX futures curve, sir?
Yeah, we briefly got into backwardation on Wednesday when the market completely sold off, but gave that away almost immediately. And now we're right back into that contango that we're all used to seeing, and the market is off to the races again. Really interesting stuff, though.
Mr. Matt, same question for you. I know you have a lot of models over there when you're not busy analyzing Jackson Hole. You're looking at the vol surface and everything else. What are your models telling you vis-a-vis the VIX futures right now, sir?
Yeah, I mean, that was interesting. Again, there's the one thing from Mark already about how big the VIX curve is, but the contango isn't as much in the SPY SPX. And, I think it's, there's a little that kink. What we do is we look at that kink and we apply what we do for earnings moves in order to figure out what the move is on there. And so that Jackson Hole kink, we're calling it, is kind of, leveled out the relationships of the first few expirations, I should say, in the SPX. So I think there's a bit of a disconnect between kind of what's going on in the term structure of SPY versus the term, how bid it is in the VIX. I think that's pretty strange. So that's what I'm seeing, Mark.
This going to be a new model for you, sir, modeling around Jackson Hole, the Jackson Hole effect?
Yeah. No, like I said, I didn't even know about it. And then, Reuters called me up and asked me to look at it. And, and it does look like there are some people kind of coming in and doing some odd trades. As a matter of fact, today on our unusual volume report, maybe an ETF that you probably haven't discussed here, EMB, came in second. It's the emerging bond ETF. And that there was a big short risk reversal. So the customer is getting short. I think there could be some fireworks coming up. We're going to get to earnings, but finally, after predicting it for 15 straight quarters, it did show some signs of life. But
Matt, speaking of SPX, someone relatively famous did a pretty massive SPX trade yesterday. And I got this from my insider on the floor. A man named Carl Icahn. I don't know if you guys have heard of him.
Doesn't ring a bell.
20,000, 3,600 puts yesterday in November in the SPX. That was Thursday, the 19th. Pretty big trade for Mr. Icahn. Pretty big line in the sand. Kind of an interesting trade. That's not normally his style. So would love to know your guys' thoughts on that one as well.
He's trying to be Buffett, but let's say 2 years earlier. He's not going out quite as far as Mr. Buffett. But I think if Carl picks up the phone, he gets the same premium that Buffett does when he calls and says, "What's the market on these puts?"
My guess is that he gets a bigger premium.
He could very well do it. He's doing it a little bit closer to home, November. That's certainly much more in my wheelhouse than the old Buffett style of kind of set it and forget it several years at least down the road. Mr. Matt, what are your thoughts on blasting away on the 3,600 puts there, sir?
Yeah, interesting because the skew is very steep. And so, that's a trade that's going to have a lot more premium. You wonder what they're doing against it, but Icahn probably is not that option savvy. Who knows? But that's a steep skew. So he's getting a lot of volatility down there, November especially. And what tends to happen to the skew is right after November, it starts to flatten out as you get closer to, if you measure it by delta, which is the way that we do it. I think the appropriate way to measure put call skew. And what happens is that's about the time when it starts to flatten out. So as it's very steep, there's a lot of banks buying skew. And then as it gets to the shorter term, people say, hey, there's not that much time left, and it tends to flatten out. So it's an interesting trade, Mark.
Yeah, I don't hate it. It sounds like someone in Carl Icahn's circle of influence there discovered skew and discovered puts and said, hey, we could sell these and get some juice and buy the S&P at these levels. And Carl's like, yeah, I'm down with that. Let's do it. So yeah, I definitely don't hate that trade here. Let's see if the market's liking or hating any trading out there in the option side of the vol space as well. We'll start in Spikes land, still pretty similar OI to what we saw last week. The top positions, let's just do a top five. Number 5, we've got the AUG 16 puts. Number 4, we got the SEP 17 puts. Number 3, the AUG 30 calls. Number 2, we've got the AUG 17 puts. And number 1, the AUG 20 puts. A lot of those top 4 there are all 1,000 plus or so for that kind of multi-leg trade we saw go up not too long ago. VIX options, you might think they'd be blowing the doors off today. And let's just do a last minute check in case any other spurts of activity came in. No, only 1,000 more contracts. They're up to only 149,000 contracts on the tape. And you might have thought, I certainly thought, given some of the sparks of life we saw in the last few sessions, we'd see that ADV tick up. But it has been trending down prior to the start of this week, and that trend has continued. It's actually down about exactly 50,000 contracts from this time last week. It's down below 400,000 out of 392. And given what we have going on out there today, that's, I guess, not surprising. We don't have a ton of paper on the tape. Earlier this week, we would this time of day, we would already have close to 400,000 contracts on the tape. But today, only a paltry 149,000 contracts. Let's break down the top 10. Let's see what's going on out there. By the way, right now, maybe reflecting, I mentioned before, kind of our VIX poll from last week and how just all over the place the predictions were, which makes an intriguing market. We're seeing right now in the top 10 sizable positions in VIX, we're back to exactly 50-50 calls versus puts. Read into that what you will, listeners, but still, it hasn't been that exact even of a breakdown in a little bit. Number 10 cost you 154,000 contracts to break into the top 10 today. That gets you to the SEP 40s, 4-0. Number 9, 160,000 of the SEP 30s, so a bit of some SEP vertical action there. Number 8, 161,000 of the SEP 16 puts. Number 7, $165 of the October 17 puts. Number 6, 167 of the October 14 puts. Number 5, $181 of the SEP 35s. So people like themselves some SEP upside, 30 and above here. Number 4, my favorite still of the top 10, still hanging out there, even more size open now. 198,000 of the NOV 60s. still hanging out there. Interesting. I was joking before on earlier shows that maybe November is the new February. It used to be February. Everyone was pile into crazy things, par calls and things. 60 isn't quite that optimistic, but still, it's pretty far up there. Maybe November is the new February. We shall see. Number 3, 206,000 of the SEP 15 puts. Number 2, 230,000 of the SEP 25 calls. And rounding out the top 10, I should say, this week. Actually, yeah, it looks like the SEP 25s have lost their number 1 spot to the SEP 17 puts. So some puts sneaking in there, just a little bit over 250,000 contracts for the number 1 spot. Total of about 6.3 million contracts outstanding right now, about 4 million on the calls and about 2.3 million on the puts. We'll break down some of the activity here for this week. We actually had a couple of spicy, juicy days out there, as you might imagine, despite what the ADV is telling us out there. Today, obviously not a ton of paper, only about 150,000 contracts on the tape. The big trade today looks like it's the SEP 50s with about 15,000 on the tape, followed by about 9,000 of the SEP 30s, 8,700 of the November 75s. That's some intriguing stuff out there. 7,200 for number 4 of the October 14 puts. And rounding out the top 5 today, 7,000 of the SEP 17 puts. Yesterday, more juice on the tape, 681,000 contracts. The most active contract yesterday, October 18 puts, 72,000 of those bad boys, followed by the October 19s, 52,000. And then number 3, the SEP 65 calls, 31,000 of those. Number 4, SEP 18 puts, 29, almost 30,000 of those. And rounding out the top 5 yesterday, almost 30,000 of the October 17 puts. Wednesday, a little bit over 500,000 contracts on the tape. Number 1 most active contract was the SEP 17 puts with about 41,500, followed by about 40,000 of the SEP 16 puts for number 2. Number 3, SEP 18 puts. So you're getting a trend here for Wednesday, 27,000 of those. Number 4, 25,000 of the SEP 14 puts. And rounding out the top 5 on Wednesday, actually a call, the SEP 35s with about 22,000 going up there. Tuesday, the most active day of the week, 807,000 contracts on the tape. The most active contract on Tuesday, SEP 17 puts, 88,000 of those bad boys going up out there, followed by 49,000 of the October 50s, 5-0s. Man, all over the place, kind of reflecting the weird nature of what was going up on Tuesday. Remember, we had a bit of a sell-off in the morning, vol spiked, and it started coming in, and then it spiked again. So we had kind of 2 phases on Tuesday. Maybe that's why we had call paper for size at one point and then put paper on the other. Usually you see a little bit more unanimity of direction when these kind of directional days. 42,000 of the AUG 17 puts from number 3, 37,000 on the AUG 18 puts from number 4. And rounding out the top 5 on Tuesday, 29,500 of the SEP 25 calls. Monday, the weakest day of the week, but then again, today is not done. Today's not looking that great. Monday, 280,000 contracts. So today may have a struggle to even get that. We'll see. 280,000 contracts for Monday. The most active contract, almost 21,000 of the AUG 17 puts. Followed by yet again, the SEP 50s, 14,000 of those. The 50 strike has had some odd persistence throughout the week here. Followed by number 3, 13,500 of the AUG 18 calls. Number 4, 12,000 of the SEP 15 puts. And rounding out the top 5 on Monday, November 35s with about 11,500. Mr. Matt, I know you watch a lot of inputs. Any intriguing VIX options trades or skew or any developments go up on your radar this week, sir?
Yeah, so we do a lot of back testing, and one of, I've been, when I put a trade on, I immediately put the opposite on. So I was short some 100s and way out of the money in 50s, and those have not filled for weeks. And just today, just this last little blip, those have been filling. So it looks like they're even though the VIX is relatively high at 18 and a half right now, they have no confidence in these. I like to have these type of calendars going, but we're getting filled on some shorter term calls. So it looks like they're really killing those right now. So that's the main thing I've seen. We do some UVXY. That's obviously tested very well. They tried to scare us by getting that up around 30, but now it's back down to 25. So those are the things that we're watching, Mark.
Are you selling the wings again, sir? Are you out here blasting away at wings? Is that what you're doing when I'm not talking to you? just crushing nickel bids left and right.
No, those I got to tell you a story. So at my online wine store, 50 Cent was signing wine bottles. So I have my 50 Cent wine bottle. We've been selling 50 Cent options, but buying other things against it. So I got my it's actually one of his favorite champagnes that he signed on my desk here.
50 Cent champagne. That works on many levels, including for this show, because obviously 50 Cent. A little bit of a different connotation here in the VIX and volatility space. Mr. Meatball, you mentioned our friend Carl Icahn drawing a line in the sand this week in SPX. Anything catching your eye out there in VIX options land this week, sir?
On a lot of the days where the VIX was a lot higher, we saw traders coming in for puts and not calls. That has been a pretty ridiculous theme of late, is that they love going after VIX puts. Part of that, and I wrote about this last night, was, have you looked at what realized volatility has been in the S&P despite kind of this selling today? Even with Wednesday and adding in today, your Garch realized vol on the S&P is less than 10. It's been like 8 over the last 10 days and maybe 9.5 over the last 20. Maybe that's part of the reason why I think we're seeing so much fading. We've seen them come in by strips of puts in September. Yesterday, they bought a huge ton of strips of puts in October. The theme has been wait for the market to pop and then fade this, and that is what we're seeing today, and kind of what we saw all week. Did see a pretty big, I believe it was a September put sold versus a long October call go up, but that's really been about it. It's been very much fade the move. We've not seen that race for calls that I would normally expect.
Well, it's hard to blame them, right? You get punched in the face once and then twice, and then it happens 15 times in a row. Maybe you learn to just dodge it, because that's what's happened, right? Every vol spike we've dealt with for the better part of the last few months has been, has lasted in minutes, if hours at the longest, right? And so it's kind of hard to fault these people when they see they have minutes sometimes to get the peaks of these vol spikes before it just turns right back around like a parabola and comes right racing back down. It's kind of hard to fault them when they say, forget it, I'm not going to even bother with the upside. Look how challenging it was this week on the upside. And I'm just going to let it reset, and I'm just going to use it as an opportunity to fade again. I can't fault those people. I mean, given what we've seen of late, sure, you're going to get those crazy moments where VIX just does its thing way up to 35 or 40 or whatever. And in those moments, the calls are pretty easy to have on. But outside of those, it's a more difficult thing. And recently, at least, the puts have been the savvier and sometimes the easier to manage trade of the two. So I think that's where I can't fault people for wanting to go the path of least resistance. Speaking of least resistance, Mr. Matt, I know you have a lot of different factors in your models, including kind of the realized vol out there in the S&P. What are your thoughts on these still surprisingly low levels of actual vol we're seeing out there, sir?
Okay, there's the third thing. I told you that Mark would bring 3 things to my attention that I hadn't seen. And I hadn't seen how low that historical vol or statistical vol is. I'm seeing it, just like you said, around 8.5. And the strange thing, and I mentioned this at the top of the show, is if you look at the historical volatility divided by the implied volatility, it is, I should say the other way. The historical volatility divided by the implied volatility is extremely low. It's as low as we've seen it, and that's what Mark, just echoing what Mark has said. And we compare that to the components that aren't nearly as low. So that's kind of a signal for or one of the data points that we look at. So we're kind of at historic lows as to that relationship. So a good point by Mark.
All right, Mr. Matt, since we have you on, we've got to get into it. Since this whole pandemic madness kicked off at the beginning of last year, there's been one persistently surprising thing to me. Now at this point, I'm not surprised anymore. I'm kind of just immune to it. But it's been just the complete reluctance to annihilate vol on the earnings front. We had massive companies effectively coming out and saying, yeah, we got no guidance for the next year. We have no idea what's going to happen. We're withdrawing all guidance. And rather than the tailspin, the frenzy, the massive explosion of vol that would usually engender, it's been mostly like, okay. And they let the vol come in and they set it and forget it, and they do it again next cycle, and cycle after cycle. We've seen the earnings volatility pretty much just erode away. And for a while now, I've been saying, well, maybe this is the moment where we're going to see that inflection point where the vol worm is going to peek its head out of the rock and say, hey, I'm back. I'm here again. And every time I've said that so far, I've been proven wrong. You went out on that limb yourself. I think it was last cycle. And the same deal again that came for all the vol yet again. But Mr. Matt, I'm looking at the reports here right now, and I'm seeing a color for the season report that I'm not familiar with. Can you explain to me what this green is? I've never seen it before, sir.
Well, I've had my sign out in front of my house, Earnings Lives Matter. And finally, they've listened. And the green on the earnings season report. So we put out this earnings season report. It shows the 6 weeks of earnings, and we track that. And usually the first couple weeks are poor for option straddle buyers, but the third, fourth, fifth weeks is often where we see some profitability. And I've been on the shows and saying, "Oh, don't worry, Mark, you're just talking to me in week 2. We're really going to see something in week 3 and 4." And it hasn't panned out. This whole pandemic has been horrid for option owners. And finally, this earnings season, I feel like I should have a noisemaker and a funny hat on. We finally, and celebrate, we finally see some life. 8% and even a break even last week or 2 weeks ago. So that's a big deal. We've actually been back watching it a lot more. I've been doing some more back testing in the earnings, like how to find the stocks that are going to move the most. We have some interesting factors in this earnings move report that we put out. What we're seeing is the stocks that are relative, implying a low earnings move and low volatility versus their historical volatility. They're often right on that. So those are the ones that we've been looking to sell. And sometimes when there's a leakage in there and there's a big either implied volatility spike, a kink that's off, those have been the stocks that have moved. AMD was one yesterday, didn't move very much. We saw that. We actually thought Robinhood might move a little bit more. There's not much history there, but that actually did not move too much. But we've got a few big movers out there. So it's earnings is back, Mark, which is great to hear.
Yeah, Hood surprised me as well. I thought for sure that was a slam dunk, right? No brainer. This one's going to deliver. Yeah, nope, shrug. This pandemic has taught me, if anything, that it's not to predict anything when it comes to earnings and just take what the market gives you and go with it, because it's madness. But yeah, you can get these reports for yourselves, listeners. You know where to go by now. TheOptionsInsider.com. Just go to the Options News and Articles tab there, right on the top of the homepage. Click on that, and you can see all these earnings move results, and earnings season reports from Matt and his team over there at ORATS. Here, I'll break down a few for you. We have Hood there. They were at the 18th after the bell. They were at about $50 exactly. They were pricing in about 10%. They delivered about 9%. So not terrible, but in the early blush, seemed like they were going to do nothing. NVIDIA was pricing in about 4.8%. They delivered 4.3%. Cisco, 3.8%. They delivered 2.8%. BJ's Wholesale Club, 6%. They delivered 3%. That's pretty much the par for the course. Then you got names like Macy's, who kind of blew the doors off it. Kind of a surprise one there. Macy's was pricing in about 10%. They delivered 15.5%. So those kind of outliers are what is starting to turn things a little bit. So I'm looking right here at the earnings season report, listeners. Week 1 was 84%. Not great, but not terrible. Certainly not the worst we've seen. Week 2, much worse, 59%. Week 3, 70%. Then week 4, guess what Matt was talking about? We actually have green for the first time in a long time, 106%. So actually slightly outperforming the predicted straddles for the week. So if you bought the basket of all those straddles, you got back 6%. And then week 5, we had 102. So actually another week that's green. And so far this week, we're at 72%. So going back the other way again. But still, the season averaging out, Matt, at an 87% so far, which is, I think, the highest we've seen in a while. Is it not?
That's respectable. That used to be up near 95, but all these months or all these quarters of poor performance in the straddles have dragged that down. But yeah, that's it's nice to see that. I think next month, I'm calling it right now, Mark, we're going to see a good earnings move for the option owners. It's going to be back to a little bit closer to normal.
So he's talking like, dare I say it, like 102% for the season? What do you think?
Let's just call it a break even. We'll be happy with that.
All right, 100% for the season. That would be something. That would be
huge.
That'd be enormous. That we haven't seen that in ages. So that would be certainly something. So there you go, listeners. The guy who crunches all the numbers for you is telling you that it may be time. It may be time. We are starting to see some green out there. Let's see what's happening out there. Let's see if there's green on the screen from the products you folks like to fade, aka VXX and UVXY. VXX was at about a 28 3/4 coming into the start of the show. It's up about 3 points. It's given up even more of that back since then. It's down to about a 28 right now. So it's up about 2 1/4 points from where it was this time last week. Putting up some numbers today. The ADV is 217,000. That's down about 4,000 from last week. But so far already today, 233,000. So we have VXX actually outperforming VIX right now, which is surprising and doesn't really happen that often. But VXX putting up the numbers. Let's break down the top 10 out here in VXX land. Number 10. It looks like we only have 3 legacy VXX1 positions left in the top 10. So nice to see some of those starting to get usurped. Number 10, 19, almost 20,000 of the AUG 29 calls. Number 8, 19, almost 20,000 as well of the AUG 29 puts. So got a nice little straddle there. Number 8, 20,000 of the AUG 27 puts. Number 7, 20,000 as well of the AUG 31 calls. Number 6, we've got the SEP 27 puts. Obviously, all this August I'm mentioning is going out today, so this top 10 is going to change a lot next week. Number 5, 21,000 of the VXX1, our first of VXX1 here. SEP 14 calls. Number 4, 21,000 as well of the SEP 40s. Number 3, 22,000 of the VXX1 SEP 9 puts. And number 2, our final pre-split adjusted position, 32,500 of the SEP 10 calls. And number 1 out there are the AUG 25 puts with about 33,000 contracts open. In terms of what's lighting it up today, like I said, a fairly active day. Looks like it's pretty much all AUG all the time, which you would expect on the expiration day. You got about 21,000 of the AUG 28 half puts, followed by 17,600 of the AUG 28 puts for number 2. Number 3, AUG 30 calls. Number 4, AUG 28 calls with about 8,000. And rounding out the top 5 most active contracts today, we got about 8,000 as well of the AUG 29 calls. Mr. Meatball, it's been an interesting week for these products. Back and forth we go. Well, what's been lighting up your tape in VXX this week, sir?
Yeah, you had a shot to make some money on VXX from the long perspective, and then that went away. It is getting absolutely smoked. That spread there is something to behold in VIX, and that is going to put a big rock around the neck of VXX, and you saw it essentially fail to really break out as the market was moving.
You know what else is moving is the other product you folks like to fade. That is UVXY. Coming into showtime, it was at about 26 even, puts it up about 3.5 points from where it was this time last week. As of now, it's at about 25 1/4. So up about 2 3/4 points from this time last week. So still up. But again, you can see these this upside in these products kind of short-lived. ADV is 134,000. That's pretty much exactly unched from last week. But again, put up some numbers, 131,000 already. So UVXY even kind of catching up to VIX today, which is, again, strange. It is expiration, so that drives some weird paper. But still, strange numbers afoot all over the place today. Let's go to a top 5 most active, let's go to top 5 sizable positions out here, because these aren't that big in UVXY. Number 5 in UVXY, about 7,500 of the AUG 25 puts. Number 4, back to the 70s. I mocked these before, but then we discovered this person was selling those for about 25 cents. Matt, this might be a new wing for you to sell, because we've been noticing for a while here, someone's just has a strip of every 70 strike throughout all of August. Every expiration, they have a ton of them. And they keep doing more of them. And I was laughing, thinking someone might actually be buying these things, or if they were selling them for like a couple of cents. But they were getting 25 cents for these AUG 70s at one point there. So there you go, Mr. Matt. In your quest to sell wings, maybe UVXY AUG 70s is your next one. What do you think?
Well, we're using them as in a calendar or in a spread. You have to be very careful, obviously, with these volatility products. So you never know what they're doing against that, but you can get some premium out there. It's pretty crazy. Like these, the tail just goes on and on and on. VIX, UVXY, all these. So that's what I think they're doing.
Imagine what it would take to get UVXY to 70.
Yeah.
Be apocalyptic. I don't think any of us want to see that in our lifetimes here. But number 4, yes, about 8,000 of the AUG 70s expiring next week, the 27th, followed by 8,100 of the AUG 23 puts expiring today, 9,300 of the UVXY 1, so pre-split adjusted Jan 1 puts, and the top position in UVXY right now, 12,000 of the AUG 70s going out today. So there you go, Mr. Matt. Some juicy tales for you out there. Mr. Meepo, I know UVXY is kind of your preferred poison on the eroding front these days. What's catching your eye out there, sir? That was very deeply scintillating, except I could hear none of it.
Oh, man. Me and Mute, we're not friends. You shouldn't mute Mark Sebastian is what this comes down to.
Yes, just free Willy on the mute button there.
Yeah, it's dying by the vine. It was really, really frothy there for a little bit, was even up with the market yesterday. And then today they are just taking it out to the woodshed. We've seen lots of stuff expiring today coming off. There's a lot of activity in options blowing up. The 25 puts today so far that are currently a nickel at 7 cents have traded 10,000 times on the day. 3,000 to 24.5, 3,000 to 26s, 5,000 to 25.5. So there is a bunch of these puts in play as we are speaking.
And we are speaking about some of your craziness as well. So let's get out there a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's pay off some polls really quickly here. Last week I mentioned the just astonishing breadth of your prognostications in our VIX poll. Remember, we closed shy of the 16 handle, so below 16 was the correct winner in terms of where we actually closed. But in terms of what the audience actually picked, it was actually the 16 to 17 half range with about 29%. Followed by 24% for the below 16, and then a tie of about 23.5% for 17.5 to 19 and above 19. And of course, this week we touched all of those ranges and then some. So you were all right if you fast forward a week out there. But yeah, what a crazy week it has been. This week, we've got a question for you that goes away pretty much in a couple of hours. So if you're listening after the fact, it may be too late, listeners. But if you get in there now at options, make your voice heard if you haven't already. We say everyone's got volatility on the brain these days, but which product holds the volatility crown? Quite simply, which of these has the highest 30-day at-the-money volatility? No cheating, use your gut. Gave you 4 choices: Bitcoin, VIX, crude oil, and Tesla. And Mr. Mark, I know you've already guessed on this one before, so I won't make you guess again. But Mr. Matt, I won't even have you guess what you think is winning, because I think you probably know what it is, and it may spoil it for our audience. But instead, what do you think our audience is voting for, sir?
So the highest 30-day at-the-money volatility, I think people are going to guess Bitcoin.
You're in tune with our audience, sir. 51.2% right now are saying Bitcoin, followed by 22.6% for VIX, 15.5% for Tesla, and 10.7% for crude oil. You think that's insane? You disagree? Maybe you agree strongly? Get in there at options. Make your voice heard before it ends in, looks like 2 hours. You got 2 hours left on this one. listeners. Let's get on out to the live chat. You folks have been talking about all kinds of stuff. Mr. Unlimited says, Vol Review segment has the best little segment song. Russell's Rundown is a close second. All right, I like Russell's Rundown. You like the Vol Review one because it has licensed music. Yeah, one of our VO guys just happened to throw in the money in there. We left it in there, but it wreaks havoc with us whenever we put it out to YouTube or stuff. We get copyright strikes on that all the time. So I kind of wish they hadn't, but I left it in because it's fun. You're right. And people like it. But it is annoying to have licensed music like that in some of our stuff because it has all sorts of other behind the scenes, unforeseen consequences that are annoying to deal with. Let's see. We got Options Queen. She said she's putting in her crystal ball pick. So I'll save that when we get to the crystal ball here. All right. We got people saying, think VIX falls. Powell's there. My boy Luigi watching the relationship of the Dow and Dow transports. I think this is a false rally. Huge spread between the two. Futures in cash and S&P is about 2 points. VVIX at 119. I think the meatball has a great point with the hedge idea, though. So there you go. Let's see what else we've got. Oh, Nichols had problems this week. He said he got burned with his VIX calls this week. A tough week. Yeah, I said that at the top of the show there, Nichols. This was not the easiest of weeks. Everyone who says, oh, you just buy some vol upside in VIX or whatever your product is and you just set it and forget it. It's a little bit more difficult than that, particularly on weeks like this. Like I said, when it blows up to 40, anybody can make money. But on weeks like this, it's a little bit more difficult, a little bit more nuanced. Let's see. Speaking of difficulty and speaking of nuance, it is that time. I think it is time for us to open up our crystal balls and attempt to wrestle with the volatility gods for this time next week. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the slippery pig known as volatility and attempt to pin it down for you folks out there, for all of your trading fun and information. And coming into the end of the show, let's see. Spike's actually getting a little bit of its life back. It's up to about exactly a 19. At the start of the show, it had eroded down to about an 18.5. So it got about a half a point back there in Spike's. VIX cash holding out close to a 19 handle, about 18.85 or so. So both of them getting a little bit of life back. That puts, let's see, I was over 3 points away on both, so I do not win. I was at a 15 double for this time this week. We have Mr. Matt from MIAX. He was at a 14.90, so he's pretty much 4 handles away. So he does not win either. Mr. Meatball was the closest. He was about 3/4 of a point or so, 0.7 of a point. It was looking good for you for a while there, Mr. Meatball. Then, as we all know, the vol gods are fickle, and they moved away from you here at the last minute. But still, you are the closest. We also had, not within our margin of a 1/10 of a point margin of victory, though. We also had a lot of folks in our audience who were feeling more vol this week, and that turned out to be the right play, at least coming into today. We had, let's see, Mr. Unlimited. Well, Mr. Unlimited was feeling less. He was saying, that's right, 1492. He wanted to discover a new world of sub 15 vol. I get what you were putting down there. It's funny. I can go for the metaphor, the pun, but didn't come to pass this week. But again, the way vol's eroding right now, give it a few hours. You might be there. Let's see. Options Queen last week, one of our reigning kind of defending champions out there. She said over 22 was too high. But that's it. Luigi said he's going to be over 22. Too much noise out there about the Delta variant. He said 22.35. Options Queen said over 22 is too high, but under 14 too low. She was at a 16.5, which is also about 2.25 points or so away right now. People saying they think Delta variant was going to hit harder this week. We had some more guesses around that more upside level as well. Again, if you folks want to play along, hit us up. If you're listening live, you know how to do it. And we'll get some names in there. And hey, if you win, if you get nice within our bullseye thing, maybe you win some fun, fabulous prizes. Speaking of fabulous prizes, we're having a ball putting together the first of the Options Insider Pro Trading Crates. We've gone into the vault. You should see all the stuff we have in there. It's kind of ridiculous, quite frankly. And so it's good to maybe get some of it out of here. But it's awesome. And so we're starting to put these together, and it's fun, and it's kind of a debate. What should we put in here? What should go? So it's been fun. So they are being assembled as we speak. They will be out the door forthwith. I'll look forward to those. Those are pretty fun. And if you haven't won one yet, stay in there. Get in the secret club. That's for you folks only out there. All right, coming up, that's a long way around to nobody wins this week, but the meatball was the closest. So, Mr. Meatball, I will allow you to choose. Do you want to go first, or do you want to have someone else go first?
I can go last. I like going last. I think I'm good at that.
All right, you go last. Mr. Matt, since you haven't been on in a while, you feel up to taking the reins, sir? And what are you feeling for this time next week?
I'm feeling it's going to get a little volatile. You know, I have to stand by my Jackson Hole, so I'm going to say a 20.
Ooh.
20 even. Nice and juicy. And then if that happens, you can blast, nice wings. The 70s will be really juicy then in UVXY, sir. You could sell all those bad boys. You might get like 50 cents for them then. Sweet, sweet, sweet money there. All right, Mr. Meatball wants to go last. We got a bunch of our audience already chiming in here. We got Mr. Unlimited say, thinks VIX falls off this week. Powell is going to say we aren't tapering yet. Not until stimulus falls off. So I think VIX drops down to 1601. Luigi's there. He's talking about, where is it here? He says I was a week early. I'm going to hold firm at 22.35. Options Queen says that as well. She was too low this week. She thinks Luigi's guess for this week now may hit next week, which was a 22. So she's coming in. She came in about half an hour ago at about a 22. Luigi's up there as well. So Matt's up there as well. So we're getting some two handles out there. The 20 handle. That's interesting. Let's see. So I said we're at threatening the 19 level, but not quite right now in the VIX cash and spikes. There is a lot of tumult out there, and I could easily see, first off, the erosion kicking in. Then we get a couple other gears kicking in next week, right? We get these spikes up and spikes up and spikes up. Will they last throughout the week? That's always the question. And so, yeah, right now, you could have been wrong right this morning, wrong right now. That's the challenge of this game. That's what makes it so fun and so maddening and rip your hair out as well. So I do also think we've got a little bit more vol, but maybe not quite as optimistic as our audience or Mr. Matt. I'm going to go out right now. I'm going to say we're at a 19 handle this time next week. I'm going to say 1935. All right, so Mr. Mark, not quite as wide of a market as you usually have out here, a little tighter this week. What are you feeling for this time next week, sir?
1616.
Oh, so that means your book is crazy long then, because you're fading your book.
No, not fading the book this time. I broke my streak of that working, so I've got to go the other way now until I get back to 16. Then I'll start fading my book.
So there's your market, a pretty wide one right now, listeners. We got a 1616 on the dark side. I'm way higher at 1935. And Mr. Matt is beyond me at a 20 handle. And looks like a lot of our audience is feeling a 20 handle as well, north of 20. Looks like others are feeling a 16 again. So we got some people fading as well. That's what makes a market. That's what makes vol so interesting out there. You could all be right in the span of a session, let alone a week, which makes it fascinating out there. So get your guesses in if you haven't already. The ones who get that bullseye, maybe a winner chicken dinner for you. All right, everybody. That music means we're done, at least for volatility views. But don't worry. If you're hanging out in the secret club, have a beverage, hit the restroom. We'll pump some fun stuff in there. We'll be back in pretty much exactly an hour for the expiration madness that is options oddities today. I was just looking at it before the show. It's so many trades that we profiled over the course of the last couple of months that all expire today. So we have a lot of catching up to do. A lot of fun stuff on the tape for this week as well. So stay tuned for oddities in about exactly an hour. But before we go, let's go back around the horn. Mr. Matt, you got a lot of things going on. You got your Jackson Hole models. You got your earnings front. You've got selling all the wings. If folks want to hit you up to learn about any of it, where should they go? What should they do?
Yeah, come on over to ORATS.com. A lot of scanning, a lot of back testing, optimization, and holistic strategies and triggers and everything. So come on over to ORATS.com. See our new site, Mark. It's we're getting a lot of good feedback on it.
It is cool. If you had to say right now, off the top of your head, someone comes to you and they're like, what is the coolest thing you got going on at ORATS? What is it, sir?
It's got to be our optimization. We could run thousands of strategies and find the best timing and ways to trade certain products. You know, it's pointed out a lot of things in VXX, UVXY. I'm not surprised that those products are, I know it's expiration, but more popular than the VIX. I think they're going to continue to be that way. We're finding some good back tests in those products.
Yeah, the secret's out on these eroding products. Used to be kind of the best kept secret in town, right? VXX, and now it's everyone and their mother. Trading more than VIX these days. The tail is wagging the dog. And Mr. Meatball, if they want to discuss these things, tail wagging the dog, eroding products versus VIX, or all the other fun stuff, the gamma radar, where should they go? What should they do?
Yeah, if you want to read about the stuff that I was talking about in the show today, go to optionpit.com and look up our newsletters and click on the VIX Edge, and you'll get that sent to you right away.
There you go, VIX Edge at optionpit.com. You know where to go to check out a little thing called Spikes, MIAXoptions.com/spikes. It's got all the data there. It's got the releases for things like these new records in the VIX futures out there. It's got historical data for Spikes. It's got a cool little video about what the heck Spikes is if you're confused. They got some cool stuff there as well, including a link to a cool show called Volatility Views. What more could you ask for? From a volatility-oriented destination, MIAXoptions.com/spikes is the place to go. And we got to get on out of here, but we'll be back again, like I said, in less than an hour now for all the fun that is Options Oddities. Then back again on Monday to kick it all off with the option block all the way through to another Friday, another episode of Volatility Views. Have a good weekend, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.